So looking ahead to the week started April 13th, two big things that I'll be looking for this week, and that is the start of US earnings season. Of course, stock markets have cratered, and as you can imagine, part of the reason for that is that these are going to be some of the worst earnings that we've seen in quite a while. So we want to see obviously how bad they are compared to what's being priced into markets. We also have China GDP. Now, that will be important because China is where the coronavirus originated. Their economy suffered first from the coronavirus. It's not all in Q1, but actually for China it was a bit more Q1 than Q2. So it gives us an indication what to expect elsewhere. And two things that potentially could be big movers on this would be Chinese equities, the likes of Alibaba, but also the Australian dollar. Now, before I discuss those in a bit more detail, I want to quickly say, if you are enjoying these videos, please make sure to click that like and subscribe button, and we can continue pushing them out to you as often as we can. Let's switch gears to the economic calendar. So, of course, it's Easter Monday, so it's going to be a bit of a slow start to the week. We'll kick off again for the most of the world on Tuesday. On Tuesday, we do have China trade balance. That will give us a little clue as to what to expect for that big GDP number on Friday. Oil inventories, they're going to be big given the massive volatility that we've seen in oil prices of late. The Bank of Canada, normally that would be a big thing, but they just cut interest rates the other week in between meetings, so not expecting anything big there. And unemployment claims from the United States, they are still very big, but maybe signs that they're topping out a bit, and that actually could be quite well received in terms of the dollar. Now, earnings season, as always in the US, it kicks off with the big banks. I'm not going to specifically go into the banks here, but needless to say, banks normally thought of as cyclical stocks. So, i.e. when the economy is doing very well, bank shares tend to do well because they're lending to facilitate that strong economy. Clearly, with the country in lockdown, the economy is not going to be bearing so well, and so these banks aren't going to be doing so well either. They have benefited a lot from some of these lending schemes through the government, and actually the Federal Reserve are taking a lot of the risk away from the banks in that kind of lending. So that is a short-term benefit for them, but longer-term picture, it's going to be not a great environment for banks. In terms of the overall picture for earnings season, Refinitiv are predicting an 8% drop for quarter one, but actually that's not as bad as it's going to get. By quarter two, we're looking at potentially an 18% drop in quarterly earnings year over year. So that's obviously pretty huge. In terms of the first quarter, it was really March where business activity completely collapsed. So in theory, we still have January and February where things were okay. So it's going to be an interesting earnings season in the fact that it's going to be somewhat incomplete information because we've got a bit of a sense about how bad March was. April is obviously a lot worse, but that's not included in these Q1 numbers. So normally, as is the case in many earnings seasons, it's about the companies putting forward their guidance. But the trend that we've seen so far, and it's understandable, is that companies look pretty reluctant to actually give any guidance. The clarity on the future is very uncertain. We don't know when the lockdown measures will end. So how will these CFOs and their teams know how to expect business going forward? No one really does. So that's going to be the difficulty. We're going to have incomplete information about the effects of the coronavirus so far, but we're probably not going to have too many forecasts from the companies themselves looking out to the future. So from that perspective, it may not change too much this earnings season. We'll just see what the results are, but it doesn't give us the full picture. Now, the other thing I mentioned there was China GDP. Goldman Sachs, for what it's worth, think that the Chinese economy could have contracted by 9% in the first quarter. Obviously, that is pretty bad, but what can you expect again when a lot of the economy is shut down for a considerable period of time? Full-year growth. If you remember the Chinese authorities, they've been setting growth targets of around 6% each year for the last few years. They normally do that at the People's Party Congress. That's normally held at the start of March, but the thing was put off because of the outbreak, and so was the GDP forecast or target that they would make for the year. So they haven't made one, and they're still debating inside China whether they should even do a lower forecast for the year or whether they should just leave it for this year. Analysts, for what it's worth, economists, think that probably GDP growth is going to be half of what it normally was. Still growth, but it's going to be 3% rather than that 6%. And if China were to, for example, set a target of 6%, given that the default was going to be 3%, obviously that implies massive stimulus. That would be a great thing for particularly Chinese shares, but I think global shares as well. It'd be a sign that China is going to try and borrow and spend its way out of this crisis. Now, in terms of things to watch when this number comes out, we mentioned that Chinese-focused shares will be big. They've obviously they took a hammering, as did the Australian dollar, when the outbreak was at its worst in China. But there's since been a rebound alongside economic activity in China, and so this could be a little bit of a make or break period. This data. If the data comes in significantly worse than expected, we'd expect the Aussie and some of these Chinese shares to roll over. If we get a good number, that could be the sign that we need that actually these are likely going to be the assets that outperform going forward, and actually assets from Europe and the US, which are suffering at the height of the virus, they're going to underperform. Okay, so those are the two things. Again, a quick reminder, it's the earnings season, and so big bank shares will be the ones releasing results as from Tuesday, and it's China GDP that comes out on Friday. Okay, I'm going to call it a day there. Thank you very much for watching these videos, and if you do get some enjoyment and benefit out of these, then please make sure to like and subscribe. That really helps us send out more videos each week.